Welcome back, everybody, to this, our 50-day property challenge, hosted by the Enterprise Development Property Fund and Private Property. Welcome back to our two celebrities, Jared and Matt L. And today, a special welcome to our guest speaker, Tore Jack, better known as TJ, from M5 Property Addicts. Guys, thank you very much for joining us again on this 50-day journey of ours. And I'm sure that by now you've learned so much and you're so eager to get going on your property investment journey. But we have so much more to learn. Today, we want to talk about strategies in property investment. And that's why we've asked our friend TJ from M5 Property Addicts to come and join us. He will tell you a little bit about himself right now and then launch into our discussion about strategies of property investment, and we'll have a great session today. So sit back, relax, buckle up your seatbelt, and enjoy a fantastic session with us. TJ, all over to you.
Thank you, Nigel. Boom, boom. Welcome. Right. So I just want to jump into a presentation format, and within that presentation, ladies and gentlemen, I'm just going to walk you through. If you've got any questions, you can jot them down. I'll try to pause. But today it's about walking through the different strategies, right? Look at myself around about 6 years ago, and I looked at, if I was to start again, knowing the strategies that I do know now today with the things that I'm doing, how best would I kind of like tell the next person that this is where you can start off from? So I've really looked at it from a perspective to say, you potentially know nothing about property, and you potentially have done maybe 2 or 3, and you're looking at different strategies. And today, by the end of the session, I'm hoping that I would have given you what I call 7 steps of getting started into the investment of property. And having said that, I want to define what an investment is. An investment is something that you're going to do today and you're going to make money. So making money for me, it's from day one. And the reason why I say that is because when I started doing property investments, which was around about, I want to say, doing property investments the right way. Because before that, I was doing it, but it wasn't the right way. I was not cash flowing. What do I mean by cash flowing? Money in your pocket. That's what it basically means, right? So you got an asset, you got a property. After all of your expenses, you are receiving profit. Profit, cash flow, the same thing. And we intertwine those two words as we go along. And everything that I'm going to teach you today, it's everything that I have done. So the beauty about what I do is that I never talk about something else that I've read in a book and it's inspirational for me. I always want to teach from a perspective of, I've done this and I haven't done it once, but I've done it a couple of times. And with that, I then bring it into my training programs. And then that way I can be extremely confident when I am teaching you because I've walked the journey. So
love that.
Awesome. So I've got a slide that I've put together that I'm just going to go through. But most importantly, I want to start off from a perspective of when an investment, there is a reason why you're doing that. And the reason is that either you're wanting to create some side hustle money, so you're wanting to have some cash flow on the side. And I'm going to ask you, how much are you wanting actually to have as an income? So think about that. And the second part of it is that people are generally wanting to create this future nest, right? And that's a lot of people think that's where an investment is all about. Now, having said that, I'm a student of Robert Kiyosaki. I gravitate to a lot of his teachings. And Robert speaks of 2 things to say that when you start to doing an investment, number one, an investment gives you money. So you cannot be contributing to something to make it an investment. An investment is an asset. It has to give you money. How much money it is, it's what we're going to be talking about a little bit later, right? That's the first thing. Then the second thing is that an investment shouldn't be giving you money in the future, but it should give you money today. Because if you're having an investment today, then it should act like an investment today, not like a liability, right? So with those two things in mind, Gerard, you've been here. So I want to ask you, what is your ideal amount of money that you're saying, hey, TJ, if I get 10 grand every month, maybe in the next 50 days, I'm good, right? On your first investment, or maybe let's even push it a little bit harder for 6 months. Wow, what's that money? And we'll call it cash flow.
For sure. So I think for me, I mean, just listening to conversations with my friends who have rentals now, they've been getting 7.5 to 8 to 9. I think that's the climate in some of the central areas in Cape Town. So I'm hoping that in my first investment, I could acquire a 7.5 and 8,000 rand just to start with, just to accumulate some funds and make sure that I'm cash flow positive, because there are rates and levies and all those things included. And so I'm going to take it very steady and very safe, I think, in the beginning. Just get the one property working for me, accumulate some funds. Hopefully, if it's an access bond, we're able to accumulate some funds and then put down a deposit for the next property, use it as equity, that kind of thing. So that's where my brain is at. I could be wrong.
No, not at all. That's your start, right? And that's the beauty of it. It's your start. It's not mine.
Yes.
It's your start. It's your reality. So that's what you need to take in consideration. That's your truth, and that's what you want to do. Metel, I think welcome, and I just want to ask you the same question as well. You starting off in investment in property. So what is your basic 101 cash flow, if you're to say in the next 6 months, is 10 grand, 20 grand? What's that figure looking like for you?
Hi everyone, sorry I'm a bit late. I just ran in. So for me, I think I'm also rolling with Jared on this one. I guess between 7.5 and 9. I'm also considering the climate of rentals in central Pretoria area. So it'll also be based on whether I'm getting a 2-bedroom or a 3. But that's pretty much the ballpark I'm going for. Not too high, not expecting too much, especially considering where we're at with our economy and stuff like that. So yes, I also want to be cash flow positive. So it also depend on the price that I'm buying this property for. But I think if I can at least get in a rental of 7.5 towards 9, it would at least cover bond and hopefully a bit of the levies, because like you say, you want, when you buy, it must be an investment from the get-go, not start as a liability and then only later become an investment.
Okay, cool. So my journey of property, when it started off, guys, I almost want to, I get where you are right now, and that's cool. That's a good place to be in. Some of you have started, some of you haven't started. But the bottom line is that if you're thinking about it already to start, or you have started maybe 1 or 2, it's a good space because you already know that that's what you want to do. That's number 1. Number 2 is that for the purposes of this class today, for me, an investment needs to give you money today. That's the bottom line of it. Why? Because when I started doing property, this is around about 5-6 years ago, I was in debt about 5 million rand. So bad debt. So there's good debt and bad debt, and we'll talk about that, right? So the bad debt that I'm talking about is that I was employed. I used to run Digital for Africa, and that's not what I wanted to do in the long term. So I started doing different businesses, and within those businesses, literally I lost around about 5 million rand. But I had the opportunity at the tail of losing that money to be in a class with Robert Kiyosaki, and they were talking about property investments. And I actually realized in that class that you actually don't need money. But there I was, I had so much money before, but I'd now lost around about 5 million. So the bank couldn't finance me. So that's problem number 1. And I think for people that are in the entertainment industry, they'll kind of like have a whole lot of money now, and then boom, for the next 6 months, you don't have that money, right? Right. Now, when I started off, I was in debt around about 5 million, right? What had happened before that? numerous businesses that had gone wrong. And by the time I went into class, I realized that, flip, there is a whole lot that I need to learn about property. And property, it's actually a vehicle that I can utilize to get into a space of paying off my debt. So when I went into property, it was not about I need to have cash flow, I need to have money, I need to have an investment. No, it wasn't about that. My sole reason was I wanted to look after the debt, the bad debt that I'd created. There's good debt and bad debt. In this case, it was the bad debt. And I figured out a way because I had actually attended a class and I'm now starting to figure this out. So I'm going to jump into a presentation. Within that presentation, so that was my why when I started off. But then once I was in class, I then also started understanding that if you're in on an investment journey, there is 2 documents that is very important to you that you should have. And a lot of us, we might not know of this, but it's very important. You'll see that whenever you go to the bank will ask of you, if you're a person, they'll say to you, what's your income statement and do you have a balance sheet? And for the first time, some of us, that's when we actually start knowing it at that time. But if you have to start doing an investment, those 2 documents, I call them reports to your financial intelligence, right? Those 2 documents, it's very important that we start understanding them today. So what's an income statement? You're receiving some money. Yes, if you're not a business, you're a person, you also do have an income statement. So you have an income, but you got an expense and the expense goes out. And out of that expense, what's now left for you? So that's profit, right? Or surplus in some cases. And the bottom line over and above that is that if you're buying any assets, now comes the balance sheet. Now the balance sheet is how much of your assets do you have and how much of your liabilities do you have? And as and when I am buying properties, I'm going to walk you through a journey of how you can start. But when you're buying a property, those 2 documents now starts playing a big role in your life. Because at some point, when someone is declared a millionaire or when someone else is being mentioned to say they are wealthy, the only way we can measure that is via the balance sheet, right? We've seen so many people that are on the Forbes list and things like that that are listed to be said they are millionaires, billionaires in US dollars. In our own Petrus Mtsiva, he's been labeled on Forbes as a billionaire in US dollars, right? But how? It's because it's got a balance sheet, and within that balance sheet, it actually stipulates everything else. Now, is Patrice any different from you and me? No, we are all measured with the same report. So as and when I'm going to be walking through all of this, in every property that I'm going to be talking to, I want us to go through and see the effects of the income statement and the balance sheet, because that's the important part, and you need to grow that. The more you're going to grow that, the more your financial freedom. We hear people talk about financial freedom. When you get to your numbers, right? So I asked earlier on in the audience to say, guys, what will be your comfortable cash flow, right? Money in the bank that you want to see every 30 days. Some say 7,000, some say 10,000, but whatever number that you are on. But at the bottom end of it all, if you were to drop dead today, on your back, how much money would you reflect to say, TJ or John, whoever you are wealthy? Is it 1 million? Is it maybe 10 million? I don't know. So have that thinking in your head whilst we are going through into a presentation. And I'm going to jump into my presentation now so that you can guys see it. All right, good stuff. You can see my presentation there. All right. So again, welcome to 7 steps of getting started in property investing, right? Well, that is me there with my family, and that's my beautiful wife together with the cat and the 2 kids that we have in the house. And this picture here resembles a place, or should I say places of happiness for us whenever we have reached a milestone in our lives and we want to go and celebrate. And we do that with our kids. And from time to time, this is my main reason why I do what I do, which is property investments. It gives me a bit of free time to do what I can do with my family. If I'm not doing that, I'm an author. So I write books. This is my first book here that I wrote, which is called From Bed Debt to Property Mogul in 2 years. Why did I write that book? It's because when I started, I was down and out of 5 million. The banks couldn't finance me and nobody could give me money. And today I'm going to show you how you can do it with even no money of your own, so that you can get yourself out of the position of only rich people can afford that. So anyone can do that. And I've got my new book that's coming out now in December, which is called Be the First Millionaire in Your Family. And I'm wanting to, in this book here, what I've done is I have utilized the properties and everything, the skills that I've done over the last 5 years. And I've now demonstrated to say anyone else can do it. You can become the first millionaire in your family. But if there is several millionaires in your family, that's okay too. You can increase. And on the far left there is me when I became Investor of the Year back in the days in 2019. So here it goes. Like I mentioned, I was down and out on 5 million. Why it happened, I think it doesn't really matter now. But the bottom line is, for some of us, we are on zero right now, or we potentially have some form of an income, 10,000, 20,000. I started off at minus 5 million. But the thing is that if you are never to let the lack of resources to limit your ambitions, you can do it. Anyone can do it. And today, I want to cover on the next couple of slides how you can do it. Because we're always talking about this, right? Don't limit yourself. The sky is the limit. But how? How are you going to do that? And today I am going to show you guys how you can do it. 5 years ago, this didn't exist. I was not a CEO of nothing. Today I'm a CEO and a co-founder of a business that's called M5 Property Addicts, right? We are in 5 cities. We have run about over 400 investors. We've got buildings in 5 cities, and we're housing around about just above 219 families that are calling most of our buildings homes. 350 students, that number might just double up by the year 2022. Why we're doing this, how we're doing this, today I am going to show you how you can do the same for yourself, right? Now, there are 2 ways in which you can make money in real estate. The first one is that you can become an active property investor yourself, right? So what do I mean by that? Rolling your sleeves up, learning, starting to do stuff, right? Just like you might have a job somewhere else, it's the same thing. You need to learn how to practically do it. The other way is that you can invest with others. There are many platforms out there where you can do some investments and things like that, but the reward of doing it yourself outweighs by far investing with others. The reason why I'm saying the investing with others is that at least you have started. Maybe whilst you're still learning, maybe whilst you're trying to figure out which one is for you. So the first one, remember I said I'm going to give you 7 steps. So my step number 1 is that you need to invest in yourself. There is no any other strong asset out there other than yourself. If people are going to come through with a deal to you, and if you don't know what you don't know, you put money, you're going to lose that money. That's how I lost the 5 million. That's how I lost the 100,000 shortly before I got married, because I was not knowledgeable. So the first thing that you need to do is to invest in yourself. I looked at myself back in the days and I said, what am I not good at? I was never good at networking. So I started reading books about it. I started asking myself, other people are getting paid 100,000 on a month and I'm on 20 grand. How do you do it? They're on high performance. So I started looking for courses. I started looking for books in terms of how can I do that? Podcasts, books. People have created, they've made all mistakes and they have documented all of these things into books, podcasts, YouTubes, you name it. And we can go and learn from there. Seminars are being held. It's another form of learning. So learning, being educated alone, getting a diploma, getting a degree, it's no longer enough. There is more that you can start to go and do out there to improve your knowledge and improve yourself. So well done for being here, because already you are improving. So I am preaching to the converted. 2015, I was on zero cash flow. I didn't have any properties, cash flowing properties. The one farm that I had outside my house, it was drowning me in debt. So how do you start to become an active property investor, right? How do you start? Number one, you get educated. We're going to dive into some deals today where I'm going to show you on how you can get started. Number two, you need to connect with other investors, people that are actively investing. Why? Because they can show you what they're doing. Two, you can also learn from what they are doing, and you can copy and paste. Or you can copy and throw in a little bit of seasoning and paste it on the other side. That's what businesses are. Nando's are growing as fast as furious in our country. KFC, it's a copy and paste, right? So the same thing. However, you can also start small. Why? It reduces your risk, but at least you are learning. I'm going to teach you some stuff today here, but not a lot of knowledge. You're not going to receive a lot of knowledge from the teaching today than a guy that's called Doing. Yes, Mr. Doing. Mr. Doing teaches you different things than anyone else can teach you. So when you start small, it's not about how small the deal is. The other return on investment that we don't talk about is the learning part whilst you're doing a small deal. So never be despised when someone else who says to you, that's a small deal. It's not. Learn fast and grow fast. The more you're going to learn, the more you're going to grow. The more you're going to grow, the more you're going to earn the quick buck. That's what it's all about. And above that, hopefully you can create some passive income through properties. Because you're buying it once, it's an event, but the process of managing that, you can give it to someone else who might be an employee, who might be a property manager, and you own the asset, and for the rest of your life, you are earning that income. I'm going to jump into my first deal that I ever did. And I think this deal here, it is still applicable today. Yes, I did this deal 5 years ago, but the point is that this is a very small deal that I think anyone is able to jump into. It was a 2-bed, 1-bath that I bought. At the time, I was in debt. So there was no bank that was able to give me any money. So how did I do it? Well, I had to go and learn how to find the properties and how to speak to estate agents. And that's what I started doing. Eventually, this was deal number 66 that I found, which means that there were 65 other properties that I've gone to view, and none of them were good deals. Eventually, when I saw this one, it was on the market for $390, and I eventually put it for $160. That was a good negotiations that I did, but was I good at negotiating before that? No, I had to learn how to do it. And on this deal here, the negotiation helped me in terms of closing this deal. Not so long after that, we put in a renovation of $50,000 in this deal. So we were all in for around about $210. We rented this place out for a period of time on $5,000 a month, and we had an expense of about R1,000 for rates and taxes and levies. Now you could be asking the question to say, TJ, so how did you buy the property when the bank couldn't finance you? How did you do it? Well, I put in an offer on the place, on the estate agent. And then thereafter, I went within my circle and I asked within my circle, who's got some money? I've got a very good deal here. And someone else raised their hand and says, TJ, this deal here that you're talking about, how much is it? And I said, it's 210 eventually when this thing is done. But the value offered is 450 if we are ever to sell it. And the person said to me, look, this is good money. In the investment circle, this person can be called an investor, can be called a partner or anything like that. So in short, I went into this deal here. I remember when I put in the offer to purchase, I had to put in a deposit. And I put in R1,000 deposit because that's how much money I had at the time, right? So with that, I went in with a partner. I literally got a partner who came in with the 209, right? And we got this deal on a company where we then started talking about the terms and conditions of our relationship. And for the first time, I went out and then I bought a property that was cash flowing. Now, I want to stop here, and then I want us to go back to, remember we spoke about the fact that we need to understand the income statement and the balance sheet of any deal, right? So if you are jumping in to understand investments, an accountant becomes a key person to have on your team. A bookkeeper becomes an important person, and you'd have seen here, someone to do renovations becomes key as well. So all of a sudden, you now need to build a team of people that you start working with. Can you look for these people before you even start investing? Yes, you can. Can you, or do you need to pay these people on a monthly basis? No, you can pay them as you go along on a deal by deal. But let me jump on to the Excel spreadsheet that I've created for us in this case here. And basically this is the effect of the property that we have now bought. So we said in income statement, so the top part here is the income statement. The rent that we received here is 5,000, and the expenses that we're putting on is around about 1,000 Rand. So we're now cash flowing 4,000. This was 4,000 that I didn't have before I did this deal. But hold on, what about the balance sheet? Well, the balance sheet, we know that the property's value is around about 450. Actually, we actually sold it for 450. Eventually when we sold it. But with what I know today, I don't sell nothing, right? Which is a conversation for another day. And then the second part is there's a liability. I owed someone some money. This could be a bank. In this case here, this is my partner investor, right? I owed him 210, which is the full amount now of that property. But hold on, we actually received what is called equity. Equity is how rich are you in terms of your portfolio. So how solid are you within this? You can utilize equity in terms of showing how wealthy you are within that portfolio. The banks loves it. If you go the route of the banks and you show them how much is your equity, the banks are able to loan you some money. And now when I started understanding this, I was like, whoa, I might be in debt of 5 million, but I need to build my equity. So if you don't understand these two reports, as we mentioned them, everyone does have an income statement and a balance sheet. Then you cannot be able to create that future that you're looking for the financial freedom, or to create that portfolio. You need to track it, and the two documents that you can track it is within this. I've just simplified this, right? But there's other things that can come into play here. For instance, bank fees, that could be another example as an expense. And maybe you might have petrol and all of those things. But I'm going to keep it simple today so that we can just demonstrate what you can do with property. Does it make sense? All right, cool. I'm going to pause here for now, and I'm going to ask if they're easy, any questions. If they're not, I will jump on to the next point.
All right, Jared, Matt Al, any questions, any comments? Okay, there, Matt Al put up a hand. There we go.
Hi, TJ. Okay, so the question I had is, you actually bought that property below market value because it was 390, but you got it for 160. My only question is how? What did you say in your negotiations?
Awesome stuff. So that's a good question, and I get that question all the time. It's about understanding the situation that is at hand on that particular property. So remember, when people are selling, look at property as a thing, right? It's not, let's not glorify it as the property, because the moment we do that, then it becomes difficult. So look at it as a thing. So why would anyone sell a thing? Why would anyone sell a bicycle? They bought it for 5,000 Rand at game, but now they're selling it at 1,000 Rand. It's because there is no value for them anymore, isn't? Or maybe exercising is no longer their thing, right? So the bicycle is actually holding them back in terms of maybe their space and furniture in the house. So they want to get rid of it. The same happens in property. So someone else might have inherited a property. They don't want it. Someone else might have bought this property and bad things happened and they just want to get rid of it. Now, Metal, your job when you're jumping into negotiations, and we watch this on TV all the time, we watch all these FBI movies. What does the negotiator do? He looks at the situation and he looks at how best can he overpower the other person who's on the other side, the negotiator. So it's a give and take, right? In this case, I looked at the situation, and the situation was that this was an elderly woman who needed some money. I asked her how much money she wanted, and she told me, and I literally doubled that money. So she wanted 80,000, and I said to her, if you had to settle the property today, I will pay you 160,000. Did I have the 160,000? No. But this was my negotiation tactic at the time. I solved a problem, and the problem, it went away, and with that, the property went away. The reason why she was selling the property was not because she was just selling it. There was another problem. Now, if you're negotiating, you want to understand that. What's the real challenge? And for me, I always go after the challenge. How best can I solve your problem? And then the price becomes immaterial. I hope that makes sense.
Yes, it does. Thank you.
Okay, awesome. Right, I'm gonna jump back to the presentation. And I'm gonna go through to I think this will be my second point, right? So we've spoken about my first deal ever, right? That was my first deal, property investment, smelly, but my pocket was also smelly. Smelly good, right? Okay. You need to unlearn and relearn stuff, right? As you can see, I'm super black. My wife is mixed, and she came with this cat one day and she says, we need to have a cat at home. And I said, no, that's witchcraft. We cannot have a cat by us. But the bottom line is that my wife at the time was highly pregnant, and she says to me, it's either you or the cat. So I decided, okay, fine. So the cat's gonna stay. I started learning about cats, and I had to relearn what my upbringing had taught me about cats, which was all cats are evil. All cats are, if you've got a cat at the house, there's witchcraft happening. And after that, I want to give you guys a story of how we actually started another strategy in our business. So the first one, we continued doing that deal, like the first deal that I showed you. We continued doing that, started buying a whole lot of those units. So those are small units in a complex. Would I continue buying that with what I know today? Not really. I'll show you one of my happier strategies as I go along. But coming back to this story here around unlearning and relearning, literally my partner, her name is Reta, she's based out in the Cape. She calls me and she says to me, TJ, we need to go into student accommodation. Well, I started having heart palpitations at that time. What do you mean student accommodation? Do you know how those kids can run down a house? So what do you think? So obviously I started bringing in my own preconceived ideas to a business strategy that she was bringing onto the table. So I kind of like said, no, let's not do it. And a few months later, she came back and she says, I've got a deal, very good deal. TJ, these are the numbers. The numbers started looking a little bit amazing compared to what we were doing at the time. And I stopped and I looked at my scenario and I said, this is almost like the same scenario of the cat. I need to stop learning. I need to stop the stuff that I've learned about student accommodation or my preconceived ideas and start really learning about student accommodation. At the time, very few people were doing student accommodation in South Africa. So I started learning from everywhere. And eventually we had our own strategy of student accommodation. Now, it's lucrative to do student accommodation in our markets today. There is a big shortage to it, which you can obviously take as an opportunity. Is it risk or is it risky? Well, you're taking in what, 18 kids? Teenagers or just post young adults, and you're putting them in your house and you're saying, I'm going to look after, well, whilst the parents are saying, hey, we don't want you to stay here, but you're taking them in. Well, yeah, it is risky, right? But wherever it is risky, you have to manage it. right? Wherever there is a risk, there is a mitigation. Just getting out of bed is risky, right? Because you can slip, fall, and die. But we find a way on how to do it. It's very successful. You can be very successful to run student accommodation in South Africa, right? We started off around about 3 years ago with 0 beds, and today we're around about on 350. By Feb 2022, we should be, with the projects that we're busy with now, we should be around about just below 500. Okay, so which basically means that the demand is there. Someone needs to supply, right? In this case, what is student accommodation? Student accommodation is, you can take in students and you can do dorm styles, you can do each unit, you can do very much je ne sais quoi, one child in a unit. You can go all wild because there is different markets for student accommodation. You can do bursaries, you can do private bursaries, you can do the government bursaries. There's lots. So there's lots to consider in student accommodation. The most basic important strategy for student accommodation is that wherever you are going to be buying your properties for student accommodation, it really needs to be close to a learning institution. Whether it is a college, whether it's a university, it doesn't matter. Now, the second thing is that you obviously need to consider the demand. So engaging the actual school in understanding what is the demand and the type of the students that are there. I'll give you an example. There is an institution that does foreign students. And they speak in Portuguese or Spanish. And when they come to Johannesburg, they want a safe home where all of their kids are going to stay. So with that, your helpers that are going to be working there, you need them to have Spanish background or Portuguese background. So you're serving a particular niche, right? So it's a business, a different model. So number one, it is, yes, identifying learning institution. Number two, identifying that there is a demand. Number three, then identifying what niche you want to be serving. And then thereafter, you now create your product versus what the demand is all about. And on this project here, we literally bought this property here for 1.72. And the value on the property, we didn't do nothing on it, but we understood the value of the property. The bank came out and then they saw that the value was on 2.9. So when we bought this property, we actually didn't put in any of our own money because the bank was prepared to give us 2.9 on a property that we were buying for 1.7. Hey, by the way, we didn't negotiate on this. So I was prepared to buy, I was searching, and luck just came my way, right? You can look at it that way. But there's another thing that I also want to stress here is that, remember, in properties, there is different land use of different properties. The owner of this property, when they sold this property, they actually didn't know that their property was already zoned for student accommodation as a municipal blanket approval. When we bought that, we identified that with our town planner. Now, that's another team member that you also need to have on your team. Now, when we discovered that, whilst we are still buying the property, we asked the town planner, is this approval already granted or we need to do something else? And the town planner said, let me check. It took us about a week. He went to check and then he says, no, it's already in place. We took that and we sent it to the bank and we said, this is what we're buying. So it's a commercial property, but the owner was selling it as a residential. And for that reason, that error literally gave us more money in our bank, right? But this is just phase one of this property. At the back here, we're going to do a development, a small development where we're going to build up some units, some 1 beds and 2 beds at the bottom and top, and about 20 of them will come up. It's a very big F. It's around about 2,000 squares. And with that, it will increase the number of beds and it also increase our income. Now, having said that, I then want us to go through into our spreadsheet again, right? And talk about what is now the benefit that we are seeing on our income statement and on our balance sheet. Because remember, this is an investment, right? We want to see money today, we want to see money tomorrow. So how is it going? Bookkeeper, accountant, please come in and help. Now, income statement. So the income that we're getting on that project, 56,000. That's what we're getting, right? We've got a whole lot of expenses now because this is now students' accommodation. See, our expenses is much bigger. Wi-Fi, all sorts of things that they do need, these kids. So our expense is much bigger. Out of that, we now have a total cash flow of around about 37,000. This is property number 2. Some of you said, hey, I just want to have 10 grand, 7 grand, right? Second property, you are on a whooping 37,000. Cash flowing in your bank account. For some of you who are employed, you're already saying, yo, I want to leave my job. Bearing in mind, I'm coming from minus 5 million. And this is what I'm doing. How am I winning? I'm learning. I am doing. If I'm not doing my own deals, I'm helping others, and I'm going to other investors. I'm like, how do you do that? Show me how you do that. And all of that, I'm learning. Today, I'm helping out Nigel. I'm also learning whilst I'm teaching you right now, because all of this stuff that's coming as I'm teaching you, I'm also relearning. And from our balance sheet perspective, boom, we've got a 2.9. And all of a sudden, we are millionaires. 1.4 million. That's our equity. And that's what it takes to be a millionaire. We are now called millionaires because of the 2 properties that we've just done. Right, I'm going to jump back to my presentation. But before I go back to my presentation, is there any questions that I can defend there on those strategy number 2, that's students accommodation?
No, I don't have any questions for now.
I don't have any questions either. I'm just taking it all in. Some interesting angles on how you built your portfolio. It does open up my mind quite a bit. But I'm excited. Thank you for sharing all of that.
Awesome. Thanks a lot for your feedback. Right, let's jump on. Right, so I think we are on number 2 as we go along, right? There we go. You don't know what you don't know, so you can never do what you don't know. So it is very important to know that wherever you are in your career with what you are doing, you're the expert in that now. But in this space of now becoming an investor, there's a whole lot that you don't know. They say that whatever that we are doing, we are potentially using like a 2% of our brains. In some cases, a little bit lower. Maybe in some cases, I think I'm a 1. But how best now can we increase that, right? And you will hear me emphasizing the knowledge bit. Nothing beats about learning. But if you don't know what you don't know, the big effect of it is that, for instance, when I was employed, I used to love my job. I used to travel throughout Africa. Every second week, I was in a different African country, right? 5-star hotel, being picked up at the airport, going through to the branch network, speaking through to the executives in the country, and then boom, I'm back again to South Africa. But then I realized that this is great for me, but my kids will never be able to inherit my job. So what can I do to be able to live them, or for us today to live the same lifestyle that I'm experiencing? And that's when all of this started off. The brain started ticking, or the computer started computing. Yeah. And when you don't know what you don't know, you'll never be able to do it because you don't know. So how do you do what you don't know? You expose yourself. Now, I was at a seminar and someone else was talking about an installment sale. I didn't know about it. I'd never heard about it. And this person was said to be a specialist. I went on his website. I started understanding what an installment sale. I understood that there's actually an act around it. I studied that act. I went to my lawyer and I asked some questions on the things that I was learning on his website. And they said to me, yes, it can be done. It's a formal way of buying a property. I was like, wow. So an installment sale is you can actually make, let's assume that Nigel today is selling a property. I can make Nigel the bank So we are traditionally exposed to the thinking that when we're buying a property, we just need to go to the bank. No, there's other ways. Nigel can become the bank. That's called seller finance, installment sale. Now, as I dig into an installment sale, I've realized that there's around about 3 things that I can do, right? If I veer off from that, then I'm kind of like violating the installment sale. Number 1, the installment sale should be 13 months and above, or not less than 5 years, right? It's as per the Act. Number 2, I need to have 3 payments in the period of the 13 months to 5 years, right? And number 3, the property needs to be registered in both parties' name, not more than 6 months. So anything from 3 months to 6 months, right? So learning that, I then went to look for a property and I found this property here. It was a mixed use. At the time, it was a rundown warehouse. The guy wanted about 1.8 million. And out of that, look, I didn't have that money. I'm still in debt here, 5 million, right? And I looked at this property and I said, okay, how can we buy it? We both agreed with the seller, and I'm going to come back to, to that question of how do you negotiate? Both I and the seller, we agreed that there is no bank that is going to finance us on this property with the pictures that you're seeing there. We both agreed. Issue number 1, we are on the same page. So what is the alternative I want to buy? Ding, ding. My head rang. Installment sale. I spoke to my estate agent and my estate agent says, yes. Right? And here's the thing. You might get to an estate agent who knows nothing about an installment sale. Why? They just don't know. So your job now is to educate them, but already you're on a back foot. So I always want to work with a number of estate agents that understand what I do and how I'm doing it. That becomes part of my team. As you can see, I'm growing my team from one person to the next in terms of professionals, of people that can be able to greasy up some stuff for me or to be able to execute things for me. So if I was now approaching an estate agent who does not know anything about installment sale, I'm going to get my own estate agent to call the other estate agent to explain it to them, or maybe get their principal to explain it to them without me putting in myself into jeopardy there. Because when you're starting to teach someone and they're trying to think, how do I get my money here? That becomes a little bit of a problem. So let's come back to the deal. So it's on the market for 1.8. Eventually, we close it on 700. Why? It was run down. 2, I cannot get money from the bank, but I really want to be in the property. I am serious. And then I put in an offer, and then on that offer, we said we're going to make it a 13 months installment sale, but we're going to pay 50,000 Rand as a deposit. So a lot of people already say, I can't get money from the bank. There's another option. I know of very big deals that can be financed this way. The benefit, there's so many benefits on both sides of the fence, right? Now, I paid 50,000 on this, and out of that, we plowed in around about 450 in terms of renovation. And then eventually, we started getting tenants in, and we went to the bank, and the bank financed this thing on 2 million. So they valued it 2 million, and they gave us 1.5 million. Now, again, I didn't put any of my own money. 400,000 that I put in was from different parties that came in. We clubbed, we bought this thing, right? 50,000 is what we paid this guy. At the end of the transaction, we had to pay, with the 1.5 that came from the bank, we still needed to pay 650,000 back to the seller. Now, when that happened, the transaction is now closed. I now own the property. I was collecting, this property is still on my books at the moment. We're collecting a 39,000 on it. And we've got a 1.5 million on it. But I just want to now bring in another terminology in investment. So people are always asking, like, the return on investments, I want to get a 20% return investment, a 50%, that's great. Now, there's another another return that is amazing, and I like that type of return. It's called infinity. On this deal here, my partners and I, we have zero money in the deal, zero. But we are returning 7,000 every month, and that is called infinity. You've put in your money in a deal, you've taken all the money out, but the deal is still giving you some fruits. Now, on this 7,000 infinity returns, we can call it that. And I want now to go into deal number 3 that we're talking to and say, what is the effect now on our balance sheet, right? So we've got an income of 39,980, and the mixed use has got the interest, the bank that financed us here, the interest is a bit steep. That's why you're seeing a big expense there. But I'm now on a 44,000 Rand, right? Statistically, in South Africa, people that are earning 44,000 are in senior management and going upward, statistically, right? So you are in the 10% of the country already on this rate, right? Now, how about now from a balance sheet perspective? Well, we've got a 2 million Rand value of the asset, but we've got a liability of 1.5. So we gained about 500,000 there, right? But in terms of our entire portfolio, we're now sitting at 1.9. We shy 2 million, right? Double millionaire is if there's such a way. But anyway, right. You can see that I'm fond of being a millionaire. I am, because I'm the first in my family, right? Like this has never happened. I'm coming from ground zero. I'm coming from a place where I was abandoned as a kid, and I'm coming from losing 5 million. Hey, I never thought I could reach these kind of figures, right? So whether you're in partnership or whether you're not, the bottom line is that you're making progress on your balance sheet and in your income statement. I hope that's making sense.
TJ, if you wouldn't mind me interrupting at this point, maybe if you just want to go back to that slide just for a second, the Excel spreadsheet, and just make it a little bit bigger for me, because, you know, I'm getting a bit older now, so I can't see so well.
No, you are old already, Nigel.
Yeah, I'm already old. Yeah, when you met me, I was already old. And I'm just aware of, you know, people maybe not being able to see properly, you know, yeah,
Okay.
if, a little bit bigger, a little bit bigger.
Okay, there we go.
That's perfect. Thank you very much.
Okay. Right, so I'm just going to go back to this slide again. So our income statement so far from a portfolio perspective, and by the way, I did put a disclaimer to say that we might have some other expenses that we're not putting in here, but we can throw them in. You can throw the kitchen sink at this thing, right? But the bottom line, our income now is sitting now on 100 on the 3 properties that we've got, right? Whether you're buying these properties once every 6 months, once every month, I'm a bit of a steroid guy. I like to buy properties more often because I'm coming from a minus. I'm trying to recoup. But for you, you could be good in your position. You're like, you know, this is my 5-year plan. Great, 1 property every year. But seeing that we're on the 50-day challenge, how about starting with that 1 property? Whether it is this one here, the small one, the bottom line is that you need to have some expenses there. So we're allocating that in our income statement. So our income statement now is sitting on 44. But now we now need to look obviously on the balance sheet part of it. A lot of people buy properties and their income statement is in the minus because they're buying properties from developments and all of these things, and they're saying that, no, we're looking for future growth, but today they're topping in a whole lot of money. I want you to have both sides of the cake, right? I want you to win both sides here. I want you to win today. I want you to win in the future, right? Because from an investment perspective, some people speak about, what are you really after? Capital gains. Oh, okay. All right, great. Then we now want to look at this deal in 5 years, in 10 years' time. What if you're not here? What if the country collapses, the market collapses? We've seen this in the African countries. Some markets collapsed. What if that happens? We don't know. So how about eating today and also expect to eat tomorrow? That's my philosophy in terms of investing. So if we're banking there 44K, imagine what it can do. I can send my kids to good schools. We can plan a holiday. We can buy a nice car, my wife, I don't think my wife's going to leave me for a Ben 10 on 44K. I don't think so. But anyway, that's for her to decide on another day. Now, at the bottom part of it, here is something else that we want to speak to. Your balance sheet. How wealthy are you? So this is your base. And you can be doing different things now with your life and take a bit of risk into other things because your base, your foundation is solid. And this is just on property number 3. And we can continue. So I'm going to pause I'm hoping that this thing of the balance sheet and the income statement is making sense. So I'm going to go into further deals, but I won't go back into the income and statement and balance sheet for now. But I'm hoping that it makes sense, and anyone, you can start. If you don't know how to start, reach out to an accountant or a bookkeeper of sort. This is one of my Happy Space projects. So this is a block of flats that we bought for 5 million rand. And the person who owned this, whatever reason he was distressed, this property is valued at 8 million. We eventually bought it for 5 million. I didn't negotiate. That's what he was looking for. And out of the 5 million, the property hadn't registered, and this guy wanted some money from us. So we borrowed him 1 million rand at a ridiculous interest rate that he agreed to say, okay, fine, if you give me the money today, I'm happy to take a 40% interest. Let's just take that as a percentage. Why? Because whatever that was stressing him out, he needed to settle that. So eventually, less the 40% on the 1 million, right? That's how much we actually bought this property for. So it's not really 5 million, but for ease of mathematics, I just kept it. We bought it for 5 million. The rental or income on this property here is sitting on 99K. Now, I was fortunate enough that by the time that I bought this property, a few other people started now coming through to me to say, hey, TJ, we see you're doing these deals. I've got X amount available. I want to get into property, but I don't want to be involved in the doing. So I became the doer in my circle. And I've got a couple of people that are now continuously plowing money into us as we are going ahead within these deals. And they're seeing the rewards in the partnerships. And out of this now, I have new friends that I didn't have before. And within these deals, I am able to look after them. And I am still now in a position where my portfolio is just growing. Whether I'm getting a 1% in the deal, whether I'm getting a 50% in the deal, it doesn't matter. But the bottom line is that my balance sheet and my income statement, starting from -5, no income on a monthly basis, I am able to achieve this, right? Now, I read this book here from Gary Bishop, and Gary kind of like highlighted the fact that at many a times I was actually in my head. And that thing is about, it cannot be done. You haven't tried it. Maybe it's for other people, okay, but you haven't tried it. I can't go in that area because I'm of this race. Okay, have you gone there? Has something happened to you? Right? So you're having all these conversations, and at some point, I was having those conversations. And these days, when I have that conversation, I tell the other TJ, keep quiet. I'm going to do it. And when I do it, the result is amazing. So all of these guys that you're seeing here, at one point or the other, they also had their own conversations. But we all know them today as legends of our lifetimes or before, because they did something. They got out there. They started doing stuff, right? And that's what I'm saying to you today, to say, irrespective of your experience, your position, what you're doing, none of these people qualify. By the time some of them are late, by the time they are late, none of these people qualify to be where they are. But they took action. They got out of their head and they started doing stuff. And that stuff has become revolutionary to the world. So we can do it. So sometimes we see things and then we think, it can be done. And in our heads, we already shut it down. And the reason why I'm sharing this with you is that I want to show you something else. Now, I'm going to speak to someone else who's potentially a high-earning employee, and they're thinking, teacher's been talking about, you can just get up and go and do and partner up with people. I don't want to do that. I want to do my own stuff because I got my own money. Great. There is other deals where you can actually do with no money at all. None of your own money, even though you're well off. So this is an example of a development. So we always see development in our neighborhoods, and we see a piece of land that's already been built, and then we're like, oh, okay, what happened? Well, someone else bought that land. But in our communities, gated communities that we stay, there's always a whole lot of available land that is there where you can actually say, hold on, a neighborhood has, or should I say the gated area, has been developed to a certain price or to a certain stage within the area. So let's assume that it's a gated area and they need to develop, let's say, 20 units. And now there's about 10 or 15 that's been developed, but then now there's 5 others. With that, you can actually predict how much the land, how much a fully built house is going to be worth. So you can buy that piece of land. And in this case here, I'm demonstrating a deal that I did. And I went to buy a piece of land for 600,000. I used the bank's money, my credit worthiness at the bank. And I realized that in the complex, in the gated area, the least property that had been sold was around about 3.8. So I went and I said, okay, fine. If I'm to buy for 600,000, what if I go and what if I go and build for 2 million? What does that look like? What does that house look like? And I looked at all the other 15 houses that have been built, and I'm like, oh, okay, that one has got an Italian style. That one has got a this. And then I looked at the body corporate in terms of what I'm allowed to do. And together I realized, oh, on 2 million, I can actually build something cool. So I went and I built something and I sold it. Now, no money at all. The bank has financed me for the land. The bank financed me for the development building loan, right? And out of that, I've made a whooping 590,000 when eventually I sell the property for only 3.2, right? But I can still push it maybe to 3.7 or even 3.8 because that was the last price of the last property. But I'm in it to spend my money faster, so I'm going to sell at a lower price. Can I do this? Can anyone do this? Yeah, we already live in some of these gated areas, so anyone can do it. But this one here, obviously, you're going to need a bigger team, architects, engineers, and all of those other people to look into this deal here to see that you can make some money. And it's important to actually do this or due diligence. We call it due diligence, making sure that the deal is staked up nicely, right? So that by the time you're executing, you have no surprises at all. I wouldn't recommend this for anyone else who's starting as a newbie. I'd say, start with the small stuff. I'm a big advocate, start small, grow fast. Now, why do I do this? I've got a bigger reason. I didn't come from any family that's rich. I want to leave a rich family behind. I do it for my family. And the reason why I'm bringing this up, the road is not easy. At some point, it's going to be tough. So when it becomes tough, you want to remind yourself why you are on this journey. And once you're winning, you can have small drips of wins along the way to celebrate. Because that way you can then be able to see, well, I'm progressing. Point number 6, I'm going to say go beyond money. What do I mean by that? Money should never be a motivation. It is a vehicle. You can do all of these strategies that I mentioned. They are a strategy and they are vehicles. Going beyond money is, I'm going to give you an example. I'm going into this deal here with zero money. It's about an 8-hectare piece of land where around about 20 people came together and they bought it. And out of that, all of these people, they have no skill compared to my skill. I've got the skill here. And out of that, they've come to me and they say, TJ, help us to make this work. Because of the skills that I've been building for the last 5 years, I am able to help them. But I can name a price to say, hey guys, I want a 5%, I want a 2%, I want a 20%. And I can help them. But when I help these guys, all of them are going to receive a sizable amount of money, and they want to create their own businesses just like mine. I've just created a different path of successful people that I and my team have created. So with that, the legacy that we're always talking about, it's really living today whilst I'm still alive. So behind myself, there is a team of other people that I do work with. I don't work alone. I work with all of these guys. They all have a different role within the business. And at the beginning of last year, we said, if we are able to do this for people like them, how about if we are to start to go and do this with other people? And the other people was, boom, we created the next generation. People that you're seeing in here are people that are starting off their own businesses in property investing, right? 4 months ago, we started with this team of people. I was checking in on them over the weekend. There's about 8 deals that are being closed. I gave them the information. I pushed. This was taken out actually at Nigel's offices. We were in Cape at this time. And all of these guys are now changing their own narratives of where they want to go. And not so long ago, we were featured on the real estate magazine. And when I saw this picture, I was like, oh, flip. I've been always looking out to people like Robert, Warren Buffett, Christo Vesa, and I'm also on it. And knowing where I come from, being on here, it's like it's a miracle. But the miracle is not in the miracle of just praying and fasting. It's about praying, fasting, and doing and learning and doing and learning and failing along the way, but also getting up all the time, because there is no journey. Like there's no journey with all the journeys. You're going to fall at some way, but you need to get up and you need to continue going. Now, you need to get started. That's the best thing. Get started. So learn, get practical knowledge what you're doing. So Brad doing, like him. Apply what you are doing to start building your own cash flow. And it doesn't matter. It might be 5,000, it might be 1,000. But the point is that you are getting what you're looking for is cash flow. And you can build from there, right? And grow your legacy, grow your own portfolio. And who knows, you might become the first millionaire in your family. And like I did mention, there are 2 ways in which you can invest. You can become active, or you can invest with others. I prefer the first, but for some people, you might want to start with investing with others, and that's okay too. And at M5 Property Addicts, that's what we do. We invest with others in all the ventures that we do. But before you invest, whether you're investing in yourself or whether you're going to come invest with me or anyone else out there, I urge people to say, number one, decide if property is for you. That's very important. It's a discussion that you need to have with yourself. Is property the right vehicle for me? Because there's many vehicles out there. The latest one has been crypto, and there's lots of stuff that's going on in there, right? And it's an amazing vehicle. Maybe that's what's for you. Now, I always say to people, if you understand what you're investing in, then it's easier for you to put money into it. And it's easier for you to take money out of it because you know when to put it in, you know when to get it out, right? But above all, ensure that your money is working for you. Just optimize your resources. That's all there is to it. Don't be fooled with 4 or 5% out there in the market. Your money can do more for yourself. And get other people involved, your kids, your family, if you do have, and it becomes fun along the way. I'm hoping that this has been great and good information to you guys. And I'm going to end it here for now.
Oh, wow, TJ, that was absolutely amazing.
Thank you so much.
Having these sessions with you and for the public to learn about strategies of property investment. So we're going to have a last sort of Q&A session with Jared and Matt Al now. Guys, if you have, I'm sure that you've got a ton of questions. Just shoot and ask TJ anything you'd like.
I don't have any questions right now.
Okay, cool. Thanks, Jared.
TJ, thank you so much. I think that was a very, very fruitful session. There was quite a lot of learning I took, especially with that balance sheet, because it really helps to see if you're being cash flow positive from the get-go. So yeah, I learned a lot today. I'm not gonna lie. Thank you. I don't have any questions. I think, yeah, you covered everything that I would have wanted to ask. So thanks.
Cool. Thanks for your time and listening.
Okay, now we lost Jared for a second, but he's back. Okay. Jared, was there anything you wanted to ask or comment on?
No, I think it's just interesting to hear the journey. I mean, there's so many different ways to unlock this venture of acquiring property and making it work for you. So I'm definitely going to be taking a few pages out of TJ's book. For me, it's still quite daunting, and I'm still doing a lot of research to understand how to make it work sort of effectively, as TJ has uh, told us today. So I'm still looking at the properties, understanding what is the kind of properties that I want to invest in. Like you said, he started with a 2-bedroom, 1-bathroom. So I may just end up doing the same thing. I'm just sort of just looking at which areas are going to be good for me. What's going to make sense in terms of what are people looking for now in Cape Town. Otherwise, I'm going to have to venture out and look in Johannesburg as well and other provinces. But just for the affordability,
Yeah.
And it's some useful information just around understanding the situation. I think we take the property just as it is in terms of the sale price, and that's it. And without inquiring as to why is the property being sold, because there's gold there in terms of some wiggle room for negotiation. I mean, the fact that your first property was acquired on the premises that it was opens up my brain to, hey, we glorify this property thing, and it's a thing, and when you look at it like that more and more, uh, it sort of makes more sense as to how you can get the best out of the deal for yourself. So this really opened up my eyes, opened up my thought process, and I'm definitely going to be looking at this a whole lot differently. So Peter, this was very valuable. Thank you so much, and congratulations on what you've done for yourself and your future family and the narrative that you're changing. I myself am on the same journey, colored male from Cape Town, from the Cape Flats, where there's gangsters and drugs, and you just want to get out. You want to ensure that you put your kids and your future family, the generation, on a good footing, so that they have. And so well done to you for doing that for your family. It's very inspiring. He's now a cover model, He's now a cover model, and so I think there's a lot of I would say, what's the word? Well, just enthusiasm, new enthusiasm that I have now for this process. I must admit, and I'll say it again, it's still a little bit scary, but the more I learn, the more I can actually envision myself doing it. So thank you very much.
Cool.
Yeah, Jared, absolutely, you're 100% correct in everything you've just said now. And one thing just that I want to comment before I ask Matt Al, I see she's got a hand up there, is that as much as the journey is scary, property is a long-term journey. Yes, you can do a couple of deals here and there and quickly make some money, but ultimately property is a long-term journey. And as much as it's scary, it is exciting. And with us holding your hand at EDPF and all of the resources that we are giving you, we will help you to make the journey a lot less scary, teach you how to not make the same mistakes that we have made. TJ and I have made many, many mistakes in our journeys, and it's cost us a lot of money, literally in the millions of rands that it has cost us. So the fact that we are still standing after so many years and that we are growing and that we continue to learn after so many years, I will encourage you to say, as much as it's scary, keep on, because it will ultimately give you everything that you hope for in terms of your legacy, etc. So
I think
that's all. Yeah,
I think
sorry.
the best word of advice I got from TJ today was look for the deals with the grannies.
Yeah, absolutely.
I'm just teasing, but
Yeah, okay.
yeah.
Cool, man.
Good one.
Oh, sorry, you've had your hand up for quite a while. You want to ask us something?
Yes, it was actually linked to Jared's comment now. Look for the deals with the grannies. Would you say, just also because I also like what Jared said in the sense of it's important to also understand the position of the seller in order to be able to negotiate better. Do you advise buying from an agent or direct? That was my question. Direct seller.
Yeah. So with what I know today, I always want to have, so my instant agent, I call them my greasy boys. And why do I call them greasy? Because the negotiation is going to become tough at some point. And I don't want to do it directly. I want someone else to come in to grease the situation. Right. So I have built a network now of estate agents that I work with. They understand how I work. And sometimes before I say I'm going to do the deal this way, they're already coming up with solutions for me. Say, TJ, we think that this is going to go A, B, C, D. This is a portfolio. Take 5, right? Now, having said that, it takes time to get to understand each other and trust each other. Your trust is going to be cemented by the first deal. When you close and you buy, that's when your trust is going to be cemented with what you say and do. For about 3 years, I had no office at all. And a lot of people, estate agents, especially the ones that have been in the game for a while, would want to meet me at the office. Can we come to your office? And I would say, I don't have one. I work from home. I work from this restaurant here. And we'll meet here. And I have 50,000 deposit. I can give you now the guarantee from my attorney, and that's what we're going to put as a deposit. And my word, in terms of what I was saying, is exactly what followed through in an email into the action. And with that, I built rapport, I built confidence, trust. And when they're now talking, they start talking to their mates. Remember, these guys are after commission. So you are a good person to work with rather than the 50 that they don't know. Because you're a closer. That's what you are. You buy. Right? So it's a guaranteed income or commission when they are talking to you. Right? And I do amazing things with my estate agents. The 1 year I had, 2018, I think it was, I was supposed to go, my wife and I, we got a timeshare out in Kruger, and there was a guy who had given me 4 deals in the year. I didn't know that he's a fanatic of the bush. And I gave him a voucher for that. And now we're friends. He invites me to Bryce all the time of game. I don't like game though, but I go. Does it make sense?
Yes, no, that definitely makes sense. I have 2 last questions. The first one being, okay, you mentioned a lot about, going into a network of friends and people with money. Where do we start meeting these? Like, I'm not gonna lie, I'm also good at, I feel like I'm good at finding the deal, but then where do I find the person with the money?
TJ, if you don't mind me actually tackling this one because of where we're at with this 50-day challenge. Matt Al, as we go through this 50-day challenge process that we are currently going through, one of the discussions that we are going to have, so we're not going to have that discussion today, and it's the reason why I thought I'd jump in here, is we're going to talk about financing your deal. And one of the discussions we're going to have is how do you source the people when you talk about the concept of other people's money? And basically that's what we are going to be discussing in that, how do you finance your deal? So I think we're not going to tackle that issue today. We're going to tackle that issue at a later stage. But the comment I wanted to make is, Matt Al, you are a celebrity. You know a lot of very important and very wealthy people. Don't worry about it. The money will come. Okay, guys, at this juncture, I'd like to actually end the session. So
I have one last question.
No. You can ask me that question later because we've actually run out of time completely. We're actually way over. So guys, Matt, Al, Jared, thank you again for this wonderful session. And TJ, especially to you for allowing us to take up so much of your time in this 50-day challenge of ours. And to the public out there that is watching and listening to what we are trying to do here, we hope that by now you have already started your journey where you have started to implement or some and hopefully all of the information that we've tried to share with you, and that you have already started to try and do your first deal and started sourcing your first or even your second or third property. So thank you everybody once again for spending this time with us today, and we will see you again tomorrow on this exciting 50-day property journey. Thank you everybody, and goodbye again.